Good morning, everybody. Welcome to the ARMR Report. You've just joined a virtual hedge fund. What we're going to do is talk today about last week's activity in the market, the collapse after Powell's comments, how we reacted live on our desk with ARMR insiders as we walked through the process step by step as it happened. So literally, the moment Powell opened his mouth, we were making trades. I'll share with you what we were doing and what we think we'll be doing next week. We're going to dive into the Cannabis Couch again. It's been so long and I've missed you guys. I'm so excited to get back on the Cannabis Couch because there's something happening here and we're going to be part of it, and we got to get our ducks in a row. So we're going to talk about what we think's happening, what our favorite stocks are, clearly what the leaders are. We're going to go with leaders first, and then we can broaden out. All right. So we'll go over what the stocks are we have an interest in and how we're taking advantage of the possible reemergence of the cannabis investing process cannabis investing theme, right? Something I've been on and off for like the last 4 years, maybe more. Okay. We booked a lot of profits at the ARMR Report on the cannabis space, and we've avoided the space for probably a year plus now. So this is a major change for us, and I'll walk you through why and how we're taking advantage. And of course, as always, this is Cracking Foxy. So I'm going to talk to you about something that's on my mind to get started that I just can't stand, and I want to share it with you and just get it out there and see what your thoughts are. As always, we'll get to Q&A. So fill up the Q&A comment section as we go. If you're watching this not in real time, feel free to add comments, and I'm happy to answer them throughout the week as you watch this show. So for all of you who decided to hop on the live stream with me this morning, I appreciate it. Let's get to it. I'm Brett Rosenthal. In case you didn't already know, this is the ARMR Report right there. ARMRreport.com, ARMRreport.com. You can join us, become an ARMR insider, and become your own portfolio manager on a virtual hedge fund desk. We're sharing with you proprietary information, both fundamentally and algorithmic information. And we tie it all together with a risk management process that really separates the successful professional from everybody else. All right. We can all pick stocks, in a bull market, things go up, but knowing how to protect capital in the bear market of 2022 is a perfect example of why you've got to protect capital first and then go capture upside. Otherwise, you're just like a hamster on a wheel and it's a zero-sum game investing. Okay, so we're going to walk through that stuff. Don't forget, I'm sharing what I do personally, my own personal portfolio, and for the capital I manage. I've been managing capital for over 30 years. 10 of those years we were running hedge funds. So I'm sharing with you all of those experiences. You got to make your own choices when it comes to how to invest, right? So I'm not telling you what stocks to buy. Okay, you got to decide what your risk tolerance is, what your goals are, and all of that stuff. This is not investing advice. All right, let's move on. First thing I always like to do right now is this.
I was getting bumped off upset me, and then you birds cracking foxy, but it's all right now that I know what it's all about.
All right, I don't know what it's all about, and I'm going to crack foxy with you right now. And what really disturbs me is it seems to be there's a complete and utter lack of basic understanding of economic principles. These are just simple truisms that are becoming more and more pervasive, it seems to me, through the Twitter feeds, things that I follow, people that I follow, through the insane political decisions that are being made. And my question to you is, is this just total ignorance of how basic economics work? Or is there something more nefarious going on? I'm going to share with you a tweet so you understand what it is I'm talking about. And this is just one example. There's many. See if I can get this up on the screen here for you. Okay, we'll zoom in a little bit. All right. There doesn't have to be an energy market. Governments in Europe should fix. And for some reason, it just disappeared. Let's try that again. All right. Governments in Europe should fix the price of energy. Electricity suppliers can't supply anyone anywhere. They can't supply Australia. So tell them the price will pay. Take it or leave it. Really? Really? That's just one idiot on Twitter. But what's scary is there's so many of them. They actually think that would work. Is it just a basic lack of understanding of truisms of economics? Is it a total and utter lack of any historical precedence? I mean, has this person or anybody who's tweeting this total swill looked at history ever? Can you find me one situation where a government control on prices ever resulted in a successful society? Zero. Capital controls never work. And yet there's still these yahoos out there. And unfortunately, it seems like the yahoo team is getting larger and larger and larger. It's populist swill. So is it just stupidity? Or is there something more nefarious? Because these types of things help politicians in certain economic environments, certain decades, helps them get elected. They promote this crap. Elect me. I'll push down the price of energy. I'll force energy companies to sell it to you at a cheap price, totally putting them out of business. And then, of course, we'll have no energy. And then, of course, the price of energy will go up tenfold. But I'll already be in office, and then I'll be out of office or whatever, right? I've already done my thing. Or maybe the politicians are just dumb and they don't bother reading the history books either. It never works. Here's another interesting one I found. Let's see if this one works. Check this out. Check that out. Did you know that Virginia has agreed to follow? Check this out. Virginia has agreed. Did you know this? The state of Virginia passed laws that said whatever California does when it comes to energy policy and ESG stuff, Virginia will do. Did you know they passed that? How dumb is that? They're two totally different states. Why would you abdicate the throne and give it over to people in California to tell you what to do in Virginia? But it looks like the governor here has decided to step away from that insane policy because California has decided to say by 2036, we're not going to allow a single gas-powered car to be sold in our state. Oh, that's just brilliant. That's just brilliant, right? Come on. Let's talk about how brilliant that is if you're a politician. First of all, what happens between now and 2036, you could drive a diesel truck through. You could drive you could float a super tanker through. I mean, who knows what's going to happen between now and 2036? But there's a midterm election coming up. So that's a phenomenal thing to announce. Help me get elected. I read a very interesting comment on this. and this is just something for you to mull over because we could debate politics all day and we have to get to the stock market. So I'm going to get off Crack and Foxy and get to what happened on Friday with Powell, how the ARMR report was positioned for it, why we made money Friday, and what we'll be doing next week. But before I go, if you leaped to that, if you were to leap to that without any other legislation, which there isn't right now, right? But let's just pretend. I think the statistic was if there was just 2 EVs on every block in a certain, maybe it was LA, certain county in California, or maybe all of California. I can't remember exactly what I read. So this isn't going to really help us today. But it was something very small. If you just had a couple EVs on every block, it would create brownouts and blackouts because there's not nearly enough energy production to support all the EVs. So this is a classic. Put the cart before the horse. Let's tell everybody you can only buy an EV, but there isn't the energy infrastructure to support that. It's just crazy. Talk about cart before the horse. What's going to happen in California is they're going to put the horse in front of the buggy again. That's what's going to happen between now and 2036 if they follow these ridiculous policies. All right, I'm off the topic. Let's move on. Okay. I could go on all day about that. I think a lot of this, I don't want to get too political, but the socialist swill is just so dangerous, I don't mind unions for the right reasons. I think unions against Starbucks because workers want to wear outfits that express their political opinion instead of a Starbucks outfit where they're working is a problem. If you don't think it's a problem, okay. All right, let's move on. So we're going to get to the Cannabis Couch, and I really want to dive into that in depth, but I feel it would be remiss to do that without talking about what happened last week in the market and couching my cannabis conversations on the Cannabis Couch in a discussion of the stock market in general, okay? Because whatever I'm about to say about cannabis, and I'm going to get to that in a minute. We're going to talk about stocks I want to own, my favorite names, how I'm trading it, what I'm trading, what my stop losses are, all those things. I'm going to go over why. There's like 5 or 6 reasons I'm going to list for you of what interests me right now in cannabis after being out of the space for over a year, maybe almost 2 years. So we've just avoided the entire collapse, and now we're putting money to work. And I'm going to share with you what the things are that have changed my mind there. But it would be a mistake to go into that discussion without looking at the stock market first. Because if the stock market does what we believe it's in the process of doing, it may delay our cannabis investment. It certainly, we're long cannabis right now, but may stop us out, and before I make cannabis a huge investment, I need the right market environment. So at the ARMR Report, the ARMR Investing way, we try to get on the right side of probabilities when rewards worth risk. That's our job. You want to see our rules and how we do this right there, armorreport.com, ARMRreport.com. You can become a subscriber. Certainly, you can subscribe to this YouTube channel. Don't forget to if you hit that alert button every time we do a video, you'll be alerted when we're doing it. So go ahead and do that. But our basic rule is 7 out of 10 stocks follow the market. That's a fact. It's been true since the buttonwood tree. Okay. 7 out of 10 stocks follow the market. So, and maybe even higher than that now because the correlation's just ridiculous. So if the market is crashing, if we have a resumption of the bear market of 2022, it will be very hard to make money in risk-on type of assets like cannabis, like the innovator stocks, like the uranium stocks, These all have, these are all quality ideas with great fundamentals. But if money's being drained out of the system at an aggressive rate, it sucks everything down. So let's get to a discussion of the market and what Powell said and what we did, and then we'll hop over to cannabis, and then I'll get to your Q&A. So it starts with a quick review of the S&Ps. There's a lot of lines on this chart. But basically what we have here is the head and shoulders top that we saw form earlier this year, and then the breakdown. Now, a lot of you asked me as the market was breaking down, will I short the market? And my answer was, I don't short the first breakdown of the neckline on head and shoulders patterns, because a lot of the times it's a head fake. The market reverses and skyrockets. Okay. So I don't generally short. Let's be honest. First of all, short selling is not for most people. It's dangerous. There's that unlimited upside potential. I mitigate that because when I short indexes. So, what would happen overnight that would get the NASDAQ to be up 100%? I mean, nothing. Okay. But what would happen overnight for an individual stock to go up 100%? Wall Street bet short squeeze. So there is unlimited risk on individual stocks. Theoretically, there's unlimited risk shorting indexes. It's shorting anything, right? Theoretically. But I'm willing to take some risk on the short side with indexes, with large ETFs. Okay. But I don't do it at the beginning of the breakdown. So I said to you then, not doing it now, but the first rally to test the neckline, if it sets up correctly, that's when I put shorts on. So what's happened at the ARMR report, and the reason we made money last week, and we had really an enormous alpha week. So our portfolios went up as the market crashed. The reason that happened is we're just executing the plan that we put into place back here when the market broke down. Okay. The plan was the first test of the overhead. This white line is the neckline. It's really amazing. Just for fun, I just have to share it with you. We were buying puts literally at the top of the market run. And it just happened that way. It's just fun to say it. It's not normal. It's so rare the market will go right to the 200-day moving average, put in a top and crash. I mean, I can't believe that's happening right now, quite frankly. But we had that run up to the overhead. And so what we did at the ARMR report, I don't short the S&P, but what I do like to do is I short the NASDAQ 100 and I short the small cap index. Okay. And I spoke to you guys about this last week. Whoops. And so right in here, this was the high of the market. You guys remember this from last week. I'm just going over it again real quick. So this crash right here, we were buying puts right at the top of that. And I want to give a shout out to Spot Gamma for helping us with that decision, because one of the things I've learned over working with Spot Gamma, and by the way, this is not a paid advertisement of Spot Gamma. They don't even know I'm having this conversation with you. It's just any Gamma information. I use Spot Gamma. You can use any Gamma you want. You can look at VIX and really, because VIX is an expression of put buying and call buying and those types of things. So you can use Spot Gamma. You don't have to. What happened on that day, you can write this down in your trading book. It doesn't happen very often, but when it does, it leads to some enormous profits for us. And this is an example of it. When the market's been running for a series of days, and then it has this levitation day where it skyrockets, and VIX, volatility, starts to go up with the market, the rally's over. Write that down. It doesn't happen very often. So for 20 some odd days, the market was going up and VIX was going down. VIX was going down. VIX was going down. And we got to that day where the market just skyrocketed. Two things happened on our desk. VIX was going up and treasuries were collapsing. Means yields were going up. And what gets hurt the most in that market are big cap tech stocks and innovative tech stocks, triple Qs and ARK. That's what gets hurt the most. And then small cap stocks is third, which is IWM. Okay. So I told you last week we were short. We actually bought puts here. We made money in our puts. We were up 100% in a couple of days on the puts. And we shifted in front of the Powell event. So right here, the market cratered down and we sold our puts and we booked roughly a 100% gain on our Q puts and about an 85% gain on our small cap puts. And we converted that over to just a straight short position going into the Jackson Hole announcement because it's easier for me to manage that risk, right? So in the morning yesterday, during the ARMR morning meeting, if you're an ARMR insider, every morning we do it at 8:30 and we go over what our goalposts are. If this happens, this is how we want to react. If that happens, this is how we react. The key to investing success that I want to share with you today is number 6 on the ARMR investing rules of the road. ARMR insiders, you can go to the list right there. Look right there, armorreport.com, ARMRreport.com. If you're an insider, you go to ARMR Insider, boom, you get to that list. We got a long list of rules of the road. I'm building that list for my children, 6 and 9. Eventually, I'm going to hand over this empire to them, and I want them to know all that I've learned over the years, and I'm sharing that with you right now as I go. I'm building the list. Number 6 on the list is to create your strategy when the market's closed and the TV is off. And then when the bell rings, execute that strategy all day to completion. Don't change it during the trading session. That's just emotion, fear, and greed messing with your head, ruining your strategy. If you don't like how the day played out, you can adjust your strategy again that night when the market's closed and the TV's off and you're just thinking it through. Then when the bell rings, you execute your strategy ruthlessly. That's it. Don't let anything get in the way of that execution. And so what we try to do in the morning meeting is say, this is the strategy for today. Now go get it and execute that all day. That's what I'm doing, right? And you guys take from those conversations whatever you want. So going into the Powell comment, and I'll just share with you. So this is the Powell day, bang, right? And this is you can take a look at our day trading screen. So I'm sharing these 4 screens. This is VIX, this is the S&P, the NASDAQ, and this is small cap, okay? On a 3-minute bar chart. So each bar is 3 minutes. The red obviously is down, the blue is up. All the other lines are part of our algorithm, the ARMR algo, which is we call the price movement profiler. The centerpiece being the VWAP, the ARMR VWAPs, ATRs, Fibonacci extensions, and standard deviations around it, okay? So what we did is we have our live trading desk. You're part of a virtual trading desk. So sharing these screens with ARMR insiders, I'm saying, okay, here comes the Powell speech, 10 o'clock. This is exactly what happened yesterday. We're listening together. I'm watching Powell literally walk up to the podium. And I had this sinking feeling just watching him walk to the podium. If you watched him walk to the podium, you already knew what he was going to say. He looked totally dejected. You have to, seriously, you'd think that sounds silly, but if you watched him, the whole body English was wrong. And the first sentence out of his mouth, which was, I'm going to get right to the point. I literally said into this microphone to all the ARMR insiders who were joining me, I'm shorting the ARK fund right now. I'm cutting all of my highest risk positions in half right now. Because when the Fed chair says, I'm going to get right to the point, That tells you there's not going to be any whitewashing, not any, attempt to make it sound better. He's not going to put any lipstick on the pig. He's just going to tell you that he's going to attack inflation and he doesn't care what anybody thinks. You could see it the minute that first sentence came out of his mouth. So that meant right up here, we were putting shorts on, and then you can go look at ARK, because we came into the day just short. We came into the day short the NASDAQ, okay, and short small caps, because that's the centerpiece for me. So NASDAQ ended the day down 4.5%, small caps down 3.6%, okay? And you could see why. We went over this last week. It popped above the trend and then reversed, and so we're short. Small caps actually held up better. You can see they're above the 50-day moving average. Take a look at the NASDAQ 100. Crashed below the 50-day moving average. And that's because when the Fed's raising rates and there's an inflation problem, the biggest sector of the market that gets crushed are the big cap tech growth stocks. That's what gets crushed. And small caps are performing a little bit better, relatively speaking. And they're going to catch up. It doesn't make a difference. They're going to get wrecked too. But at the beginning of this, they perform a little bit better because they have some energy maybe in that index, which held up well, right? So there's other names in there. It's not just big cap tech. So what we were shorting aggressively was the ARK funds, which we didn't have going into the short, into the comments. And you could see that ARK already gapped below the 50-day moving average. So the innovative stocks are already leading to the downside. This is precisely what happened really in a big picture back here. This is 2021. The innovative stocks broke down first. So you see innovation leads the rest of the market because NASDAQ went up when innovative was collapsing. Now NASDAQ big cap tech is catching up. Okay. So literally the moment Powell spoke, we were shorting the ARK funds. We were cutting all of our aggressive stocks in half to protect capital. Okay. And you could just see where we were on the ARK right here. Okay. So the speech started, what was it? Where's 10 o'clock? Let's take a look. 10 o'clock right here. Okay. We were aggressively shorting right in here. And ARK ended up down 6+% on the day. So that's what we did yesterday. It allowed us to have a profit yesterday with the market crashing. We're still long energy. So to go over our portfolio, and then we're going to get to the Cannabis Couch, because that's what it's really fun to discuss. And I can't wait to get to it. So just to wrap up this thought. As it was happening live on the desk, we were walking you guys through how we're trading. We protected capital immediately when the news came out. We added to our short position. We still have a position in energy as it held up better than the rest of the market. If the crash doesn't happen, and that's a major if, I don't know what's going to happen Monday, because if you look at the NASDAQ 100, that's a major collapse below the 50-day moving average. And if we look at the S&P 500, which is just the biggest index of everything, that's a crash from the 200-day below the 50-day moving average, closing on the low. So what am I going to do Monday morning? I think there's a better than 50-50 chance the market gaps up Monday morning. I mean, sometimes when you get that crescendo down and close on the low Friday, it was just day traders and whomever puking out their positions at the close, and then the market gaps up Monday morning. I think any strength Monday morning can be sold. The market's going lower. If the market crashes Monday morning, I mean, there's nothing to do. I mean, I'm not going to add to my shorts. We're already short. So, I'll probably be managing the rest of my long positions, because I imagine if the market is gapping down and getting crushed on Monday, it's going to start attacking all of my favorite stocks, which are energy stocks, uranium stocks, and cannabis stocks. So let's get to cannabis now and just wrap up that thought. The comments from Powell could not have been more bearish. We're in a bear market. We've experienced a rally off the low. CNBC et al. did you and everybody watching those channels a serious disservice when they started banding about the idea that a new bull market started because the NASDAQ was up 20% off the low. Okay? The risk monitored ARMR report's been read the whole way through. Okay? There's no new bull market starting. Between 2000's peak and 2002, during the dot-com collapse, where the NASDAQ dropped 75% from peak to trough, the NASDAQ had 7, count them, 7 rallies of 20% on the way down 75%. This was just the first one. Okay? So when the risk monitor is red, it's telling us something's wrong with the market. It doesn't mean the market can't rally off the low. It did. But it tells you that the market's not healthy. And I see today the Investors Business Daily's come out and they've gotten more cautious on the market. I guess so. They've been real bullish. I guess they're a little more cautious now. The market's collapsing. All right. So next week, we'll have to see. Join us on the desk if you want to be part of the live virtual hedge fund. You're the portfolio manager. Get on the desk with us, and we're going to walk you through what the trades are. We're going to share information and ideas. We have a lot of brilliant ARMR insiders, who I call certified ARMR analysts, because they're so good. They bring great information into the room, and we're all sharing it, working together to a common goal, which is to protect our capital and capture upside when we can and end up living the dream. So just, come join us. You can subscribe if you want right there. Join us on the ARMR Report, ARMRreport.com. It's right there. All right. Having said all that, let's jump onto the Cannabis Couch. Yeah, I can't wait. All right. Let's take a look at MSOS. Let's talk technical first. So just to put it in a little bit of perspective, look at that chart right there. And I just so you know where I'm coming from. And I'm not saying this to, this is not about how right we've been. That's not the point of this comment I'm about to make. Just want to share with you, we've avoided the entire collapse in cannabis. And we avoided it not because we don't like the space, not because we don't see the great fundamentals. There are great fundamentals. And I'm not saying it, I hope it doesn't make you upset if you've ridden them down. I don't mean to offend you, because there's no offense here. It's just that the ARMR report is about protecting capital first and then capturing upside. So we use a very simple stop loss discipline. I'm happy to share it with you. If you want to be an ARMR insider, join us and we'll go through it. Okay. And so the price action of the cannabis stocks took us out. It wasn't my belief that there's something wrong with cannabis. It's just the price action took us out, and it hasn't given us a single opportunity to get back in. Maybe there's like 2 opportunities along the way that we tried and we got out. We made a little bit of money once, broke even on another, back to cash, because we just have tight stops when we get started on these things. Okay. But I want to share that with you because it gives you some perspective. I feel that a lot of people in the cannabis space who still own these stocks are so beat up, it's hard for you to see what's happening now. You're almost just like, whatever, I hope this turns around one day. And so for somebody who's not, we don't have losses in the space, we can look at it objectively and say, what's happening now? All right. And so we look at the decline here. So first of all, just from a basic technical analysis point of view, the downtrend on MSOS has been broken. And it's done it in a typical way of a nasty downtrend. It breaks not by the price skyrocketing, but by simply going sideways and building a base. And that basically tells you, just basic technical analysis, that'll tell you that the selling's just exhausted. And it could go dead quiet for 6 months and trade in this range, but it'll be building an investable base. So that's the first thing to consider when looking at MSOS. Okay. Now, the second thing to consider is that the shares of MSOS have not been able to sustain a move above the 50-day moving average all the way down. So we don't know yet if this is going to be sustained. But every time MSOS pops above the 50-day, which is that black line, we're going to get involved on our desk. I like to say we've earned the right to take that risk because we haven't ridden the position down. So it's every time it happens, I'm going to put money to work. So from a pure technical point of view, we're starting to put money to work. I always talk about MSOS because that's my favorite vehicle to get started. Trades here on the US. But, and I'll show you in a minute my top 4 names. You can go through all of these names. An ARMR insider asked me, well, if you're buying MSOS, do we have to wait to buy, TrueLeave or something? I said, first of all, you can do whatever you want. This is not investment advice. This is how I run my own money. But second of all, MSOS is an expression of all of the best cannabis companies. So I'm buying the ETF. You can go buy the individual names on the CSE if you want to. That's up to you. All right. But the time is now to start adding these names again. I want you to notice something about this conversation I'm going to have with you about cannabis. I am not going to bring up any discussion about politicians passing laws. That has nothing to do with why I'm buying MSOS right now. Every time you see the stocks skyrocket on news hitting the tape that Cory Booker and Schumer are having a kumbaya moment around the campfire, that's the time to sell them. Okay? Because they're not going up because politicians are going to get something right. One day they might. One day they might get it right. But when I say they're not going up because of that, until it actually passes, what difference does it make? It's just all lip service. It means nothing. It's a sucker's bet every time. And what I love about the breakout right now, back above the 50-day moving average on volume, is that that's not what's driving it, in my opinion. It's not anything political. I think what's driving it are the following factors. Number one, the stories hitting the tape last week that the naked short selling going on in the Canadian Stock Exchange is supposedly going to get reined in with some new rules and regulations by the Canadian version of the SEC. I don't know if it's going to happen, but we know there's massive naked short selling going on against our favorite cannabis companies. And if there's any reduction in the naked short selling process, that's bullish for the cannabis stocks. Couple that with a series of Wall Street bet chatter. Hey guys, let's go squeeze some of the naked short selling going on in cannabis stocks. Now, I don't invest because of what's going on in Wall Street bets. That's like crazy meme stuff. And that's for just, day trading fun. But it doesn't mean that they can't get something started in a sector that's heavily shorted from a naked short selling point of view. Okay. Then I found something really interesting. I was talking to Noah Ham, the CEO of Advisor Shares. Great guy, a friend of mine, Twitter friend of mine. We've been chatting and having conversations the last couple of years. And he pointed out something really interesting to me I hadn't even noticed. Have you guys checked to see what the largest holding of MJ is? So MJ is really the ex-US cannabis ETF, MJ. And the largest holding The last time I looked was always Canopy Growth, Aurora, they always had a large Telray position, all these other names. The largest holding right now is MJUS, which is their ETF of U.S. cannabis companies. I think it's like a 12.5% share. It's the largest holding in MJ. Put on top of that Advisor Shares just came out with a 2X MSOS. It's called MSOX. That happened last week. Why is this important? Because it's pulling investment capital into the space at a time where perhaps short sellers get in trouble. We then look at this chart and we see a base has formed since June. And the breakout occurred last week on volume. And then here's the last piece of the puzzle. I'm going to get to your questions now. We can talk about it. I'll share with you my four favorite cannabis stocks if you don't want to own MSOS. This is not investment advice. Do whatever you want. I'm going to show you the four I'm buying, okay? What I loved about this story was the action Friday. Who else was shocked about the action Friday on MSOS? I mean, the market got wrecked. And I thought for sure MSOS will be back below the 50-day moving average before the end of the day because they're killing risk-on stocks. And look what the stock did. It stayed in the top quarter of the weekly move. It didn't even retrace half of the move. It didn't even end the day at the 50-day. This is the intraday action. Okay. You're going to notice something. You know how I say charmer trades. We have charmer trading a lot. This was a charmer trading entry point on MSOS on Thursday, right here. The white box and then the green box would be the buy opportunity. So that was like right in here. I haven't put the green. That's like $13, right? It gapped up in the morning and made that tight consolidation around VWAP and then took off again. But this actually had a run before the market just totally imploded. MSOS was running back above the VWAP before the market just totally imploded in the last half hour. And it came down and made a higher low by the end of the day. Look at what was happening to NASDAQ. NASDAQ's making a lower low by the end of the day, as was every major index. And MSOS, you get the point. MSOS was making higher low at the end of the day. Am I reading too much into it? Maybe, but it's because I'm on the Cannabis Couch and I'm enjoying myself. All right, let's get to your Q&A. Although I'll show you right now what my top four cannabis investments are other than MSOS. Okay. Let's call it top five. Top five cannabis stocks that I'm putting money in right now. In no particular order. They're all equally as good. All right. You probably know these names, but they bear some attention just to remind you what I think the five best names are. So Cresco is on and just look at the way the stock has been acting. Cresco closed above and has been holding its 50-day moving average for over a month now and made a new high this week. Curaleaf attacked the 50-day moving average last month, been holding it, made a new high last week, obviously, right? Green Thumb is leading. Look at Green Thumb's action. That was the real leader last week. What's going on, guys? That's a serious move in Green Thumb. True Leaf, obviously, is a top choice of mine. Looks a little bit more like MSOS, kind of been fighting that 50 and just popped above it and closed green on Friday with the market collapsing. And then my fifth one I'm going to throw out there is Juicy. I like Juicy. I like the management team. I like what they've been doing. I think Juicy's a good idea. Maybe, if you wanted to throw in a sixth, maybe Columbia Care. But it's like a rogues gallery. You know most of those names, but those are my top 4 to 6 names if I was to build a portfolio of CSE stocks where there's been naked short selling going on. I can go buy them on the Canadian Stock Exchange if I wanted. I don't think I would do that, though, because the U.S. dollar is so strong right now. I don't want to convert and own an asset in Canadian dollars. I'd rather own the pink sheets and hold on to my U.S. dollars. So anyway, those are my thoughts for today. I hope you guys found them helpful. Let's get to the Q&A and enjoy some friendly banter and see if we can't come up with some more ideas for this week. All right. Did I cover everything? I think I did. Risk monitor is still red. Spot Gamma negative last week. Here's a ridiculous quote just for fun. This is from the IBD. This is the kind of stuff. I love IBD, but this is ridiculous. The current pain in the market rally could be setting up for some opportunities for big gains, though when is unclear. Really? Wow. What a mind-blowing idea. Give me a break. Do we have any real journalism? Can someone write something worthwhile, please? All right. XLE, AMLP, XOP. Biden draining SPR for votes. Yeah. I'm staying with all my energy plays right now. We can just go look at the energy plays here. So there's XLE. There's no reason to sell XLE yet. The market's crashing. So just to remind you guys about last week, the ARMR report is set up. It's a virtual hedge fund. We're using hedge fund tactics. That's what I'm teaching and sharing with ARMR insiders, something I did for a decade. So in this particular market, we're short tech-heavy indexes. We're long energy. So you could see the week we had last week. Tech-heavy collapsing, energy holding on to the really dramatic gains for the week. Now, if the sucking sound of the black hole of a bear market gets loud enough, it's going to take down energy. So don't think energy can be immune. All right. And I reduced my energy exposure on Friday because of the absolute implosion going on in the market. So I did reduce it some. Basically, what I did was book gains across the board on my energy stocks and just reduce exposure some, and then see what happens next week. If the market crashes, I'll probably get taken out of the rest of my energy for a while. If the market holds up, then I'll put back on the position that I sold probably, or fill out the portfolio with other energy related type of names, commodity type of names. Okay. But here's something I learned a long time ago. People think that when the U.S. releases SPR, it suppresses the price of energy. And it may do that in the short term, but it's actually incredibly bullish because the U.S. generally, there's like a mandate for the U.S. to refill the SPR. Now, I did hear something interesting recently about that from an energy expert, that it's more of a suggestion than a mandate. We don't have to refill the SPR. And if we did, and here's a mind blower, it's not going to come from U.S. crude, which is light sweet crude, because we got all of that in the ground here. And so if the U.S. were to increase and put crude back, so there's many different levels of crude, light sweet crude, there's sour, and they all make different things. They break down different products. So when you fill back the SPR, you don't just have SPR full of light sweet crude. You have it full of different things. And so we've been dumping on the market things that are not light sweet crude. And so we will replace it with these other types of crude products that come from other countries around the world. So we'll be importing energy. It's kind of crazy. But the quote mandate reads that if the U.S. is a net importer, then the U.S. must carry X amount of barrels in the SPR. But in the last, decade or something or less, the U.S. is a net exporter of energy. So we don't really have to fill up that SPR. So we'll see what ends up happening there. But generally speaking, the SPR gets filled again. And so it kind of sets a floor in prices. It will be interesting. Another thing happened over the weekend. Do you see what's going on in Libya? It looks like civil war is breaking out again. So more energy going offline, wildly bullish for energy. Let's see what happens next week. So still long XOP, still long XLE. These are things that are on the ARMR portfolio spreadsheet. You can find that on the website. Feel free to subscribe. Down below is a subscription button. You guys have heard that enough, but go ahead and hit that button and subscribe and join us on the virtual desk. I like all of these positions. I wouldn't, there's no stops that have been hit on any of energy. So I just protected capital a bit, Sean, and raised some capital and booked some profits on what was a great run. Now, I didn't sell anything in the pipeline space because that's just, long-term, if I can, dividend production. But I just took a little bit off the top here. We're right up against these highs here. This looks like a blow off, and we ran up to it. So book some profits there. Gold and silver. You say mostly buy on weakness, sell on strength. Oh, gold and silver. Oh. All right. Let's look at gold and silver. We'll use GLD and SLV, the ETFs, just to take a look at it. All right. Here's a general rule of thumb. I don't buy an asset that's trading below all the moving averages I look at, and all of those averages are in a downward trend. So every average is turned down. So these are the moving averages I use. The standard 200-day, that's the gray line. The exponential 200-day, 50-day, 25-day, 14-day. Those are the 5 moving averages that go into all of my ARMR algorithms. Okay. And so I look at them in various ways, and it's all part of the code. So yes, I like to buy weakness. So, but what I like to say, Dennis, is we buy weakness in the midst of strength with top day strength. So weakness in the midst of strength. First of all, I want to see an uptrend. So that's the strength. Then the sell-off, weakness in the overall bigger strengthening picture. And then we buy top day strength. I want to see a move higher that gets me to go long. Okay, I don't catch a falling knife. So let's go look at 2 different examples. Let's look at XOP again, which we just bought. So if you look at XOP, wow, look at the strength in XOP, major uptrend. This was the weakness, aggressive sell-off to the 200-day moving average. This was the entry point, holding the 200-day and breaking above the 50. So right here, it's now above every major moving average I look at, and all of those moving averages are in uptrends. So I'll get long there. And we've bought weakness in the midst of strength, but we're buying top day strength because it's popped back above the moving average. So now take that theory and look at gold. Is there strength, overall strength? I'm going to have to go no on that one. Back to 2020, gold is actually in a downtrend. So there's no strength. There's weakness in the midst of weakness. And there's no top day strength. It hasn't gone above any of the moving averages. So there's no way I put money into precious metals at this point. Silver is even worse. There's no way I put money into silver at this point. This is weakness in the midst of weakness with weak top day action. Can't do it. Not going to do it. It wouldn't be prudent. Now I'm going to jump in here. That was my impersonation of Dana Carvey doing an impersonation of the first George Bush president. Not going to do it. Wouldn't be prudent. Not at this juncture. Anyway, I'm going to look at a question I had from an ARMR insider. By the way, guys, if you're watching this not live, you're watching the replay and you have questions, put them right here in the comment section. I don't see you guys commenting a lot. Do I just cover everything every Saturday? You have no questions for me? It's amazing. Wow, I didn't know I was that good. Obviously, you got questions. Put them in the comments, and I'll answer them during the week. All right. I did have a question via email from an not an ARMR insider, but somebody who follows the ARMR Report and has been for a couple of years. And this was the question, so I'm gonna answer it right now. There was a desire to know what was a better investment risk at the moment, Peloton or Trade Desk. So, following the theory of what I just shared with you, this is a long-term downtrend and weakness in the midst of weakness. And so there's nothing I would do with Peloton, first of all, from a technical point of view. I got no interest in that. Now let's look at Trade Desk. Oh, look at that. First of all, unlike gold, Trade Desk made a new high in here. See, gold made a lower high, so you have a big downtrend going on. So Trade Desk tried to make a new high, and then it cratered because the market crashed, okay? But Trade Desk is making a huge rectangle. So I wouldn't call this strength. There's no strength here, but it's also not weakness. It's just consolidation. It's a huge pattern here. It's trying to build a base. And there's massive top day strength, which we caught, right? We were buying calls in front of the number, in front of the earnings number right here. So we had a huge run. We were up 260% on that trade. So if there's any stock I'm going to buy, Peloton or Trade Desk, it's going to be Trade Desk. Now let's talk fundamentals. Remember, I shared with you, and if you wanted to get this, I can send it to you. Just DM me in Twitter. So it's at Brett Rosenthal, B-R-E-T Rosenthal, Twitter, and I'll share with you the PDF file. But there's 7 reasons we elevate a stock to our whiteboard, and really we elevate it to our ARMR power play ideas. Like there's the best of the best. One of those reasons is barriers to entry, moat around the business model that's sustainable. Peloton doesn't check any of those boxes. Okay. It was a fad that got extra attention in the midst of a pandemic, and there's just no barrier to entry for Peloton. Then Nordic Track comes out with their bicycle. It's a race to the bottom, and then people decide they're sick and tired of being in their house and let's get on a bike and bike outside. I mean, there's just no barrier to entry, and don't tell me, oh, it's fun to do Peloton because I can, ride a mountain in Italy. Give me a break. All right. So Trade Desk, totally different. Major change going on in the way ads are served up to viewers. A change that's taken place that's changing the process that was put in place in the 1960s. There's a paradigmatic shift going on, and this company's at the center of it. So technically and fundamentally, Trade Desk is a no-brainer compared to Peloton. Now, what's going to happen next week? I don't know. I mean, you're asking me for a day trade or a quick swing trade? I don't know. But from an investing point of view, I'm answering that question. It's a no-brainer. I'm still on Telray, but yes, timing was okay. Zero, let's take a look at Telray. I don't know if that's a question there, but TLRY, right? I still think that the only investments for me in cannabis are going to be U.S. cannabis names. I like Telray. I think it's probably going to make it. My guess, but I don't really know. But I'd rather just put money into U.S. names. That's where the real juice is, in my opinion. Hack and Foxy. Soviet Union was very successful. Right, Andrew? See, Andrew, that's exactly right. These policies, these populist policies have never worked and always support the elite and always suppress the worker. And yet the worker somehow buys them over and over again. They get served up this swill and they eat it. Why? It's never worked and it always keeps people down. Now, I'm not saying capitalism is perfect, but capitalism allows everybody to rise who works hard enough. That's just a fact. You can hate me all you want, but just look at the historical facts. There's always going to be elites in every society. There's always going to be income gaps in every society. I want to be in a society that allows everybody to succeed if they work hard enough. OCLN. Oh, I got nothing for you on that, but that's a sexy looking chart pattern, Dennis. Look at that look at that chart pattern. What is this? Oh yeah, I can't get this on the. It's just such a small cap. What is this? It's a 5 cent stock, brother. I can't deal with that stuff. You're on your own on that. Eras, Bitcoin is currently 19. Whoa. It was down 3,000. Oh, geez. Eras. God. You know, I want to short MicroStrategy so bad, but I'm not going to short an individual stock because I can get, carried off the trading floor. And the puts are so ridiculously expensive. But Eras, an ARMR insider, a certified ARMR analyst, I appreciate you sharing that information right there. And it just does remind me, first of all, Bitcoin's a good lead indicator for the whole market. So Bitcoin crashing below 20,000 on its way to 10,000, and less is a major problem for the market. I put out that tweet last week. I think before the bear market's over, in order for the bear market to be over in all assets, we're going to have to get to the point where when I say the word sailor, you think of a boat, and you stop thinking of Michael. Like he'll just be out of everyone's mind. He'll be like a total charlatan. He'll be exposed for what he is, and it'll just be over, and no one will care about him anymore. So, yeah, I think MicroStrategy. I'm going to go out there and say it. I think this company goes bankrupt before this is all over. But I wish I could figure out a way to express that opinion. I guess I should have bought the puts when I was buying puts on the market. We should have just put some puts in the portfolio. But I looked at them and they were just so expensive. It's like, God, it's brutal. And so you have to time the collapse correctly. And that's almost impossible to do. But I'm with you on that, Eras. It's just a total freak show over there. And it does remind me, and I hate to keep harping away on this, but I did my Kraken Foxy, I think it was last week, about this, where don't drink the snake oil. Let the salesman have the snake oil and walk away. Be the Indian. Don't be part of the crowd. Because these guys on YouTube come out and on Twitter come out and they say, oh, you won't know if you paid 19,000 or 24,000 when Bitcoin's 100,000. And I say, there's a little typo there. You won't know if you paid 24 or 19 on the way to 10,000. If something is a great investment, you don't need somebody to bang your head against a wall to do it. If someone's pitching you that hard, walk away. Something's wrong. And that's what these people do. And it's a total disservice to the hundreds of thousands of followers they have on Twitter. I have a tiny little soapbox and I try to help people out. These guys have hundreds of thousands of followers on Twitter and they put out these ridiculous tweets just burying people. It's tragic. Oh, thank you, Eras. I appreciate it, man. It was a good week for us. And I was talking to Rebecca, my wife, about it last night, about the week. And I was saying to her what was most satisfying about last week is that we put into place this strategy months ago, which was to say, I'm not shorting the initial collapse, but when there's a rally back to the neckline, we're going to get short. And I tell my wife, the hardest thing for me is to literally execute a strategy I've laid out. And I get to the end of my year. I don't know about you guys, but I do. end of my year, and I say, God, I was right about this, 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 and this, and I didn't make any money on it. How's that possible? And it frustrates me every single year. So every year I try to get better. Okay. And the only way to get better is rule number 6 on the ARMR Investing Rules of the Road. Understand your strategy and execute it when the market's open. Don't change the strategy during market hours. Execute what you know. You've already thought it through. You're already right. Trust yourself and execute. Anyway, thanks. It was great. Oh, yeah. Let's take a look at that. Yeah, I think I have that on my list too. VRNOF. Let's take a look at that. Yeah, I think I didn't highlight it, Eras, only because if you look at Verano, it's not leading. Okay. So you can see it's in a downtrend in here. And while it went up above the 50-day moving average, like MSOS did, if you take a look at, let's say, Green Thumb, see, it's in an uptrend since June. Verano's still in a downtrend. So if I'm going to add other names around my MSOS position, I want to add the leaders, the guys that are breaking out and carrying them. So you see what I'm saying? If I'm going to put extra exposure into my cannabis trades, then there's nothing wrong with Verano, but it's not leading, And if you look at the 5 names, maybe 6 that I've highlighted, Curaleaf. See, Curaleaf is making higher lows, and it's been trading above the 50-day for over a month. How about Cresco? Cresco has been trading above, right at the 50 for over a month, breaking out of a pennant this week. And so, maybe I'm splitting hairs here, Eras, but if I'm going to add around my core MSOS position, then I'm going to add the guys that are breaking out first and stick with the leadership. And of course, those calls we've been buying the last couple of weeks are winners. What do you got here? VR. Got a stock or Vroom? Like, here we go. Vera Mobility. Using the latest technology, data intelligence to help transportation safer and easier. Interesting. That's some pretty good earnings number. Look down here. Okay, you guys can't see it. Look down here. You got 190% earnings growth versus a year ago, 46% revenue growth, 67. This is really good numbers here. I'm going to write that one down. Maybe do some work on that. Here's another name I got to do some work on. JEPI. Anyone got a beat on this? Is that really a 9%? What is going on with this, by the way? Why? Well, is that really a 9.6% yield on JP Morgan total return? How do they do that? I got to look into that. Not that I'm interested in buying it here. It's following the market. But if it craters down into here and it's got a real yield like that, I got to look into that. So that's something another ARMR insider asked me about. And ERII is an interesting idea I want to work on next week as well, energy recovery. And so, we could do some work on this. We don't have to get into it right away. The market's coming down and these things are going to come down, but that's a good time to do research. Yeah. Here's my only question. There's MSOS. Look at the volume coming into MSOS. I love it. And look at the volume here. So all the volume spikes above, you can't see it. All the volume spikes above the average. See that line right there is the average. And the volume spikes are blue. All the volume spikes going back to July that are above average are bullish up days. That's different than the entire downtrend in MSOS. I should make that number 6 on my list of reasons why I'm buying it now, because accumulation has started. This is exciting if the market doesn't crash. They launched MSOS last week. It's 2 times. So it's a leveraged ETF on MSOS. And it's not for my money. I'm not saying you can't do it. There's nothing wrong with it. Somebody wants the excess, exposure. That's great. But I got to be honest with you. It's been very hard to make money in cannabis. And in fact, money's been lost in cannabis going back to 2021, okay, on a fairly consistent basis. So coming off the bottom, why do I need leverage on small cap ideas that are explosive to begin with? I like using 2x ETFs for indexes. If I'm going to buy the S&P, I'd rather buy SSO or SPXL, which is 3 times the S&P, because then that makes sense to me. I want more performance out of the S&P. So I'm going to buy 2 times or 3 times, because now all of a sudden I got like a growth stock, because it's going to be 2 or 3 times the S&P performance without any growth stock risk. You follow me? So this is a virtual hedge fund, and we're about risk management. Okay, so I'll use a 2 or 3x if it's on an asset that I think I'd like to get more exposure to volatility, and I'm not taking individual stock risk. This is great. But God, the individual stocks inside MSOS are volatile enough. That's my opinion. They're volatile enough for me, and everybody else has their own risk tolerance. So obviously there's a desire for MSOX. Otherwise, advisor shares wouldn't have brought it out. So I guess there's guys who want that excess, leverage. I just don't think this is a market to be using excess leverage in anything, other than occasionally I use it on the S&P. If I get long the S&P, I'm short. I'm not even leveraged short. I'm just short the index. I don't need 2 or 3 times short the index. Now is not a time for leverage, in my opinion. But I'll use the S&P leveraged ETFs to hedge my short risk on an intraday basis. That's the only thing I'll use leverage on right now. This is a dangerous bear market, and leverage is dangerous. That's my opinion. Interesting. Good question. Oh, I'm glad you brought up treasuries. We were debating this on the trading desk. An ARMR insider was bringing it up and wanting to know, when should we get long treasuries? So maybe treasuries are going to work on a bottom in here, right? That was a little double top, then it came down, made a bottom. So maybe we're just in this rectangular pattern. So again, my basic rule is when an asset's trading below every moving average and all the moving averages are in a downtrend, I don't go buy anything. Now, if treasuries could somehow get above the 50-day moving average, maybe I would take a shot at them again. So that's first of all. Second of all, why would long-dated bonds go up? Because bond players, the debt guys, see that what the Fed's going to be doing is going to create massive recession 6 months from now, and they're discounting it. So they start buying U.S. treasuries. We also have an appalling collapse going on. Is that hyperbole? I don't know. In the euro versus the dollar, I think it drives European investors to hide capital in U.S. treasuries. It's what a win-win if you were European and you've converted your euros into dollars and bought U.S. treasuries. I mean, boy. So the more aggressive that gets, I was listening to Hugh Hendry's live stream from yesterday, and it's always a good listen. Thank you, Brian, for reminding me. And so I listen to him every week. I find Hugh very interesting and makes you really think. And they were talking about, I think it was like the 3rd largest bond market now are Italian government bonds. Italian government bonds. The reason it's the 3rd largest is because it's used for collateral on many deals, because after the financial crisis, there was this backstopping where the ECB in Germany are going to backstop Greek and Italy. Remember that? And so it doesn't make any sense. It's like a bubble that he was pointing out this weekend. It doesn't make any sense that the Italian bond market would be so large. And God forbid that starts to unravel. And one thing that I think we would start to see if that unravels is this chart of treasuries start going like this. I mean, everybody will be hiding capital in U.S. treasuries. Now, you can't hide them in short term so much because the Fed keeps raising rates, but the longer rate, you'll get that yield curve inversion. Long rates will crater as short rates are going up. So there's a lot to unpack there. I don't profess to be the greatest macro guy when it comes to all these things that Hugh Henry talks about, which is kind of his bailiwick. But I did find that very interesting. There's a very odd situation going on with the euro breaking down and what's going on with Italian bonds. So let's watch that closely. I'd like to own treasuries. I could see myself doing it, but not yet. And so when you say what happened Friday, just a bit of I guess just a bit of a safe haven bet and a bit of, I think if you want to know what the market was trying to express Friday with a rally in treasuries, which this is what treasuries did on Friday. You could see it rallied up there like that as the market was going down, is the bond players saying 6 to 9 months from now, we're going to have a major recession. But that's just a knee-jerk reaction to Powell's comment. So we got to see if it really continues to play out. I don't even know, We have to see. It's just one day's reaction. And that's also true for our short positions. Hey man, the market reverses and takes out the high of yesterday, I'll be out of all my shorts. That's the other thing I absolutely adore about what just happened to our portfolios, the ARMR report. We have short positions on higher prices, and the action that happened Friday drops our buy stop to the high of the day Friday. If the market goes back above the high of Friday, I could book all of my gains on the short side and be done. Shorting, great. Start loading up the boat. Triple my MSOS position. I mean, really. So I'm in this position that I strive to be in every time I invest, which is, can I get long or short and have the asset do enough so that I can lower my stop or raise my stop so that I can make sure I make money on the trade. Theoretically, I should not lose money on the shorts now at all. Okay, there's overnight risk. Who knows? Sunday, Powell comes out and says, I made a terrible mistake on Friday, and we're going to start adding liquidity and reducing interest rates. Okay, the market would be up 5%. I'd be screwed. I mean, I can't help that. But assuming that doesn't happen, and it's just normal market trading, I'm going to make money on my shorts no matter what happens at this point. And it's all gravy from here. And that's my favorite position to be in. Oh, Sean. Okay, thanks for that. You're absolutely right. But I did want to share with you, Sean, that I was listening to, I'm doing research basically, and listening to a very intelligent individual about the energy space. All he does is energy. And there is no direct mandate that the U.S. has to refill the SPR. That is a mistake that people don't realize. So the timing on when the U.S. refills the SPR doesn't have to be right after November. Okay? If the U.S., it says in the document, if the U.S. is a net exporter of energy, we don't have to fill the SPR. So the timing on when that gets refilled is anybody's guess. But I'll tell you what, Sean, I bet it would put a floor in energy. But who knows, Great week. Hey, thanks, Stephen. Oh, I'm so glad you're able to use shorts successfully with the guidance that I'm sharing. I'm glad that's working for you. And let me remind everybody, I generally don't short. Okay, I generally don't short. I don't recommend shorting for most people. You've got to be nimble. You've got to be smart. You can't over leverage. You can't, all these things. So be careful, what you're doing. But every now and then, it's a good way to hedge a portfolio. That's what I do. And I stay away from single stock shorting. I don't do that. Bitcoin short. Well, probably not a bad idea. Yeah. And of course, that's just the inverse of BITO. I'd rather just borrow BITO and sell it. But, and this is an interesting debate I was having, do I want to own the inverse ETFs or do I want to literally short? For my personal money, I am short. I believe, and maybe I'm just, paranoid, but when I guess it's not just paranoid. I witnessed it in 2008. So when the market crashes, the inverse or options spreads go like this, and it becomes very hard to get the right pricing. I would rather have cash in my account. When you short, you borrow shares. I borrow shares from the Interactive Brokers of QQQ, and I immediately sell them, and then cash shows up in my account. If the market crashes, there's cash in my account. There's not an asset in my account that has to constantly reprice to capture the collapse. And I remember times where the market would be down 5 to 7% in a single day, and these inverse type of relationships don't reflect that. And when the market opened, some of these ETFs did not open. They couldn't figure out what they were worth. And then they opened later when the market had ripped off of the low. And so you didn't have an opportunity to book a profit. So I've been through that before. And if the selling gets ugly enough, I want cash sitting in my account. So that's why I'm literally short. But for accounts where I can't short, like an IRA or somewhere I don't have a margin ability, then I'm buying the inverse, and I'll have to be real clever on that day. When the market crashes and they won't open the inverse and the market opens, I might get long the underlying to pair my position off to lock in my gain. And when it comes to Bitcoin, I'd much rather just be short BITO. Totally. Sean, I don't know if you've been with me, but I've made that exact comment. Sean just wrote, Bitcoin futures released in 2017 topped Bitcoin. And when BITO was released in 2021, the ETF, that topped Bitcoin. And I said that when it was happening, Sean. I said to everybody at the time, why are you all so excited that now they're trading an ETF on Bitcoin? That's the worst possible thing that can happen. You know how I know? Because I'm a precious metals investor. I ran a precious metals hedge fund for a decade. The worst thing that happened were ETFs and futures to allow for manipulation of the price. And that's exactly what's happening to Bitcoin. Not a surprise. Absolutely expected. Thank you for that, Sean. So JPI is selling covered calls to generate yield. Selling covered calls to generate yield. That's how they get the total return. So they're buying the indexes and they're selling covered calls. So that yield obviously changes if they can't write those calls correctly, I guess. Selling covered calls is a very conservative strategy. That's interesting, Sean. I don't know if I want to do that, but I might want to do that with some of my capital. I've always wanted to write covered calls. And it's just such a hassle going through the process of doing it and keeping track of them all. And unless you really focus your attention there, it can kind of get away from you. So I don't know, maybe that would be a good idea after the market craters. Saber, hello, welcome, and you're welcome. He writes, wants to say hi and thanks for a great job. Another ARMR Insider success story, and thank you for joining and making that comment. Buying 2024 calls. Michael, I've actually bought 2023 calls. So I'm just going out to 2023. And full disclosure, I bought them 2 weeks ago. So before the pop this week, I already stuck them in the portfolio. I just couldn't stand it. I looked at them. I said, look at the leaders breaking out. Look at the higher lows since June. I got to start seeding my portfolio. And they're turning into what could be the mother plant, if I'm going to use some cannabis terminology with you. All right, guys, listen, I have enjoyed this conversation with you as always. I appreciate you guys spending some time with me on a Saturday. I look forward to seeing all ARMR Insiders 8:30 Monday morning, and we'll get at it again. We got to stay nimble, and we'll set up our goalposts in our morning meeting, and then we'll just execute. All right. So you all have a great weekend, and I'll see you on the flip side.